Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, February 4th, right after the markets close. Well, Wall Street indexes moved higher today in seesaw trading, recovering some of the ground lost in Thursday's session as Amazon's positive numbers boosted sentiment after a mixed week of big tech earnings. Amazon jumped 15.5% after reporting robust earnings in the holiday quarter. Results from mega-cap growth stocks have dictated market moves this week, as you probably know, and investors seek out tangible data to support sky-high valuations. And on that note, let's move on to three charts that'll give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. Now, when the SPY closed today, as you can see right here, it closed at $448.57. That's about 4485 on the S&P 500 itself. Now, the SPY's last and final all-time closing high took place on January 3rd, back here, took place on January 3rd at $477.85. And again, when I captured this chart today, we're down to 448.57. Well, we've had a doggone successful, exciting ride, that's for sure. In January, after making that all-time high, the SPY fell right through its 20-day, the red line, its 50-day, the green line, fell through those moving averages, rallied back up for a couple of days, and then fell like a stone. It fell down here, interestingly enough, to 430 or 4,300 on the S&P itself. Look left on the chart with me. That's pretty much where our September lows were. So that price support held, which is a good thing. That's a positive thing. So in recent weeks, it fell down past through its 200-day moving average, which was disconcerting. The black line you see fell down to this 426, 430 zone, then consolidated sideways for 5 trading days, then rallied back up almost to the 50-day moving average, but not quite, right up to about right up maybe 458 or so. Then fell back down to today, closing again right above the 200-day moving average. And that's a good thing, that it's still above that black line. We always want our stocks and indexes, if they're on the bearish side, we definitely want them above the 200-day moving average. So now if the SPY starts up in the coming week, what does it have to fight here? It has to fight price resistance at 458, and as you can see, we've got the moving average coming down overhead at 460 and change. So this zone here could provide with price and moving average resistance, and the 50-day is a pretty powerful guy. That could provide some resistance there if the SPY starts up. Of course, if it can move higher, then there's more price resistance up higher and then up to the 477.85. So if it can move all the way back up to that, we're in good shape. If it takes it a little while, then what we have to watch is support here. Again, we have support, moving average support at the 200-day moving average coming in at about $443. So this zone right here, 443, 440, that is potential support for the SPY. Now, naturally, if it moves back down, if it heads back down to retest these lows at 430, we definitely want it, or 4,300 on the S&P itself, we definitely want the S&P to stay above this, or the SPY above this 430 line. We do not, if we want to stay bullish, we do not want to see it move any lower. So remember, always remember, especially when you're bottom fishing, remember The definition of an uptrend, a stock uptrend, is when price is making, like left here, when price is making higher highs and higher lows. That's an uptrend. Well, recently it's been in a short-term downtrend. And we can say it bounced, but we can't say it's in an uptrend yet until it makes a higher low. So keep that definition in your head when you start bottom fishing, just to keep yourself disciplined. You want this S&P again to start making higher lows and higher highs. Okay, so let's go on to our next chart. Today is a chart of the Invesco QQQ, symbol QQQ. This is the ETF that follows our NASDAQ 100, major index in the market, and certainly where all the big guys are, the big momentum stocks like Apple, wild and crazy Amazon this week, Microsoft, Alphabet, Facebook, that whole group. So today the QQQ closed down here, right here on this candle you can see, at $358 and a penny. So it made its last all-time closing high way back here in November, on November 19th at 403.99. So it couldn't, as you can see, the SPY could go up and make a higher high in January. The Qs could not. And of course, the QQQ is filled with the top non-financial stocks of the U.S. stock market. So of the NASDAQ index, I should have said. And so that has a little something to do with it. When these tech stocks move, they're wild and crazy to the upside, but they can sure do the same thing to the downside. So right now, again, closing today at 358, the QQQ is trading just about 11% below its all-time high. Now, we know that if it's below 10%, it's in correction territory. So it is that right now, but we won't fuss about that until we can see what it is doing in the coming week. Now, if we take a look at this chart, we can see after it started out in January, it fell really hard again through its 50-day, 20-day moving average, 20-day cross the 50 right here, fell really hard, harder actually technically wise than the SPY did for sure. In mid-January, it fell down to this 335, 340 zone and consolidated there. Then it finally rallied back up. But again, these big tech stocks that have been reporting have taken, in the last few weeks in the fourth quarter earnings season, have really taken the QQQ all over the place. So again, in mid-January, it fell down here to 335, 340, held, rallied back up over the 200-day moving average. That's a good thing. But wait, because we know the definition of an uptrend is higher highs and higher lows, and we have to see where the next low comes in. Now, the question is here, can it hold here at about 352? Can it hold at the bottom of these two lows here? Can this be the higher low is what I'm trying to say. And we are not going to know until that action actually takes place. Now, we have resistance up here at about 370. If price starts up, it's going to first bump its head on the 200-day moving average at 366. Then it needs to move on up and move up over this little high here, this little pivot point at 370. Then, of course, we can see the 50-day moving average coming in at the moment at 381. We'll have to see where that is if price can keep moving higher, because the 50-day can cause some aggravation. Then, of course, there's some up here around 390 price resistance. And, of course, there's all these folks here who potentially bought the Invesco Qs. And if it climbs back up to this zone where there's a lot of action, are these traders, investors, going to say, okay, the darn thing's back up where I bought it, I'm going to sell it and at least get out even? So there could be some resistance potentiality from that up here as well. So once again, like the SPY, the QQQ needs to make a higher low in the coming week to say, yes, we're back in an uptrend here. It needs to move above the 200-day moving average. So if you do want to go bottom fishing, please, please, please mind your protective stops. And again, although I love to buy the lows, I'm going to wait a few days here to see what kind of mood this market is in before I start bottom fishing. Our final chart today is a daily, much calmer looking chart for sure. It's a daily chart of the Financial Select Sector Spider ETF, the XLF. Now the XLF has 67 holdings. The top holdings include Berkshire Hathaway, JP Morgan Chase, Bank of America, Wells Fargo, and Morgan Stanley. Now the XLF made an all-time closing high on January 12th at $41.42. Then, because the banks did pretty well, then it started falling. It fell pretty hard here, and that was when earnings season came in. We got some disappointments. So it was up at that high at 41.42. Then it fell down to its 200-day moving average down here, sank below it, but managed to climb back up above it. And today when I captured this chart, the XLF was trading, closed, I should say, at $40.10. Now, kind of interesting here. I love to put horizontal trend lines in when I see them make sense. And in this case, the blue line I put here, notice that right around 38.50 or so, there is a series of lows, pivot lows that are put in by the XLF, and it basically seems to like that number many times when it pivots right around 38.50 or so. If we keep going left on the chart back into July of last year, we'll see that used to be resistance. This 38.50 used to be, see here how it was bumping its head on the 50-day moving average and this horizontal trend line that kept forming as price moved. Price kept coming back to it. Well, this time it's bounced off of it, and I'd like to see, we've got a lot of green candles here, I'd like to see if the XLF, and again, I'm in a reasonably orderly ETF for the coming week because I'm not so sure that all the action is over with yet. Certainly the downside action, I don't know that, and neither does anybody else. But this seems to be reasonable, especially if interest rates go up. That means banks make more money, so we'll make that simple. So if in the coming week the XLF stays above the 50-day and more importantly stays above the 200-day moving average, which again is coming in at 38.22, I will add a small position to my trading portfolio. I'm going to put in a pretty tight stop at 38.50. Now, in the coming week, after I get in, and it's a big if, let's say the XLF climbs back up to its all-time closing highs up here, that was 41.42. If it can get up, and it'll take it, if it can do it, it'll probably take it a couple of weeks or so. If it can, and it gets up above that level, if it can close above 41.50, then I will add more shares to my position. And of course, by then I will have a trailing stop. So if the market remains reasonable, that may be something to do. And one more thing, if the market stays steady next week and we get a smoother track going, a little less volatility, then I may look for a bottom fishing candidate to give to all of you then. Please know that this is a really good time to check out my online training programs and make sure that you are ready to head into February and March and close out the first quarter with a profit. These programs include our flagship training, 7 Steps to Successful Trading, How to Swing Trade Successfully, one of the most popular trainings we have, How to Trade the Trend to Profits. This is an easier way to do things, but if the trend starts up again, and it will at some point, it's a sweet way to make money. Also, for those who are new, we have how to read charts, 3 winning setups, and right now, not a bad idea at all, how to bottom fish like a pro. Of course, there are many more trainings available. These programs can help you increase your gains quickly and easily, so check them out. To see all of my online training programs, simply go to the link on this screen up here, or easier still, just click on the orange button below. So until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.